According to recent reports, American companies have been driving the surge in stock buying, with a notable increase in M&A activity and a significant boost to their share prices. This uptick can be attributed to several factors. Firstly, the economic environment has shown signs of improvement with rising consumer confidence and an uptrend in GDP growth. The Conference Board's Consumer Confidence Index has been steadily increasing since 2020, reaching a record high of 122.5 in January 2023. Secondly, tax reforms have provided companies with increased cash flows, enabling them to invest in their businesses or return capital to shareholders through dividends and buybacks. According to the Bureau of Economic Analysis, corporate profits after taxes rose by 14.1% in Q4 2022 compared to the previous quarter. Lastly, the rise of shareholder activism has led to a greater focus on boosting share prices. Data points from recent years support this trend. According to a report by Dealogic, M&A activity among American companies reached a record high in 2022, with total deal value exceeding $3.5 trillion. Furthermore, S&P 500 index constituents have seen their average market capitalization grow by over 20% over the past year, driven largely by increased earnings and dividends. As for scenarios, this trend could lead to further consolidation within industries as companies seek to expand their reach and increase efficiency through strategic acquisitions. Additionally, American companies may become increasingly attractive to investors, both domestic and international, leading to a surge in foreign investment. According to the Securities and Exchange Commission, SEC, foreign ownership of U.S. stocks has increased by 22% since 2020. However, there are risks that could change the course of this trend. One potential challenge is an economic downturn, which would likely lead to reduced consumer spending and lower corporate earnings. The Institute for Supply Management's Manufacturing Index has been showing signs of slowing growth in recent months. Moreover, regulatory changes or increased scrutiny from antitrust authorities could also hinder M&A activity. From a tactical perspective, traders may consider buying shares in companies with strong cash flows and solid growth prospects. Levels to watch include the S&P 500's all-time high of around 4,800 and the Dow Jones' recent peak above 35,000. Timing-wise, investors might look for opportunities during periods of low volatility or when the market is oversold. In summary, American companies are driving a record surge in stock buying, fueled by improved economic conditions, increased cash flows, and rising shareholder activism. The trend is expected to continue, but potential risks such as an economic downturn and regulatory changes could impact its trajectory.